In a previous episode, we talked about how insurance is one of the single biggest problems in real estate in 2025. And so today we have an insurance expert on to answer some questions. Amanda Berry with Legacy Insurance Partners. Welcome.
Thanks. Thanks for having me.
Yeah. So glad that you're here today. There's so much to talk about. It's such an in-depth topic. And, most people, I don't think that they enjoy talking about insurance, but I know you and I do.
Yeah, we're geeked out. It matters.
It does. It's a big deal. It's a big deal. So, some of the reasons why this topic has been so hot lately are premiums have been skyrocketing, carriers are pulling out of certain markets, people are getting completely blindsided at their renewal, like just shocked at what their new premium is.
Mm.
So, tell us about what are some of the major changes that have really rocked the insurance industry in the past couple of years?
Yeah, so we're in a really unprecedented time right now. I've been doing this almost 10 years now, and natural disasters aren't new, but I think the cost and like the catastrophes that are happening are more frequent everywhere. And so it's like hail, hurricane, flood, wind,
Fires.
all the fires. And in places you don't typically expect them. So it's becoming more and more expensive for these insurance companies to take care of their clients. And they can barely afford to. And so what that means is we have to consider the risk that we're providing when we sign up for a home insurance policy. These carriers are saying yes in the event that they have to replace the entire home. Like that's what insurance is all about, the indemnity of like if my house goes up in flames or it's a total loss, what we're signing when we take a new policy on is this carrier is going to replace it. That's expensive in the past 5 years. So they need to get their money back. And they're doing it through a lot of unusual ways that we just haven't seen in this industry before. So it's the natural disasters, and there's a lot of ripple effect from that.
Yeah. Well, and like you said, building costs, or you didn't say this, but building costs have gone up, which I think is one of the things that they're taking into account because they do. I mean, every time you write a policy, you're filling out a spreadsheet and trying to figure out like what would be the cost to replace this home, right?
Yeah, so it's called a replacement cost estimate. If you have not heard of that, get familiar because every policy has one associated with it. So for every property, there's an estimated cost to reconstruct this building. And so every detail of the home is considered. And that's a calculator. It's like an algorithm on the back end of a quote system. And so it's usually within range of like 50,000, on a broad carrier picture. But a lot of agents aren't very thorough. And so the problem with that is no two homes are the same. So taking a dollar per square footage just doesn't work. Also, you see a lot of agents just using like the purchase price when they're slapping the number onto the dwelling amount. When it comes time to rebuilding a home, you want it to be accurate, and it's based on this RCE, this replacement cost estimate. I never send a quote to somebody without that accompanying it.
Yeah, I love what a thorough job you do. And one of the things that you're doing because you're a broker versus a captive agent is that you're shopping a bunch of different carriers to find someone the best policy and the best rate. But can you talk a little bit about how um, the carriers talk a little bit about the carriers, what's going on with them? Like,
Sure.
I know that some of the big carriers that we've heard about and would be familiar with their names, like they're pulling out of entire states, right? Like,
Yeah.
didn't somebody just pull out of Colorado? They're just not going to insure in Colorado anymore.
Yeah, I wake up and I look at my emails and I'm ready for anything. We've seen carriers say we're no longer willing to write business. And we usually get a heads up. Like we have really great relationships with our marketing reps at Legacy Insurance Partners. But I wonder how often people are really trying to keep up with those appetites. Nationwide stopped 3 years ago. And then we've got Progressive stopped recently. They talk about coming back into Colorado. State Farm, they're not willing to write a whole lot of new business, and that's a competitor of mine because they're captive. So
Mhm.
I've been partnering with State Farm agents to try to soften that blow for the people who are neighbors of ours.
Oh, how awful. So all of the people who are State Farm agents in Colorado, when State Farm decides they're not going to write any new business in Colorado, wow, that
Yeah.
my mind is blown right now at how much that would impact them. Like, are they moving
Yeah.
to new careers or moving to different
Good question.
carriers?
So they have a huge book of business, but they took a $2.8 billion loss. I think it was 2023. And so that made them like a different rated carrier. And so they're being observed differently by Franny and Faye and like these companies that monitor the industry. And so it becomes a problem for the mortgage side of things to accept those policies. So the solution was we're just not going to do business there. What's happening more often than not is that when the solvency changes and they're kind of bleeding out, they'll sell to another company. I don't see State Farm doing something like that. But like a lot of these carriers are finding ways to partner with other newer, like more willing to take the risk on company names. It's buying each other out. It's maybe doubling the rate is a good way to get some money back to try to recoup some of those reserves that have been lost from paying out lots of claims.
They certainly have done that, doubling the rate.
49% was the average for home and auto combined in 2024. That's the state average of like increases.
So everybody saw
It's
increases.
devastating.
And this kind of explains, this talk about the industry in general explains how come, because people wonder, like, why did my insurance go up when I didn't file a claim? So this is the answer to that. It's all of these things. So what are some strategies that buyers or homeowners could use to potentially lower their premiums?
Find a broker. Brokers have a huge advantage because they can shop around, and it's just not a one size fits all kind of industry anymore. Um, Deductibles, I would say, are the biggest control factor for consumers and homeowners because you can increase the deductible. We call that self-insuring. So self-insuring is like taking on a little bit more accruing risk yourself. And if you have a higher deductible, that correlates directly to your premium.
Yeah, that's right.
So
Because if you have a 500 or a 1,500 or a 2,500 or $5,000 deductible, your premium
yeah.
is matching it, but in the opposite direction.
Yeah, they are directly and proportionate. So another way would be to bundle as much as you can. If you have a boat, if you have an RV, if you have cars, even business policy sometimes, if the carrier writes that line of business. Bundling as much as you can is a huge advantage to your rate.
Bundle and avoiding claims, right? Like,
Absolutely.
talk to me a little bit about how safe is it to call your agent and ask them about what if this happened? Like asking these hypothetical questions, because I know that we've talked before and I found out that in some cases you could call and talk to an agent about something that happened, then choose not to file the claim, but it's still counting against you down the road.
Yeah. We call that an inquiry.
Mm.
If you have a broker and you've talked to them enough to have like a little bit of trust there, and I tell every one of my customers, call me before you call a carrier to make a claim. Because if you call me, we're going to look at the practicality of a claim being paid out, or if it's even worth it. And so we look at the coverage, we look at the deductible amount, and we make a decision together about if it makes sense to make a claim. Because if you do call and it's not meeting the deductible amount, it's not worth actually proceeding and pursuing through the whole claim process, you've got this $0 with a date, the date being that claim date that you mentioned. As soon as you say the word claim to like a captive agent, they work for corporate. As a broker, I work for the person on the phone.
Like if you were at Progressive and you called their 800 number because you don't have a personal relationship with somebody.
Yeah, exactly. So the carrier's interest is we see there's damage. We know we didn't pay out, but damage occurred. So they usually want like extra documents, some details, just thorough explanations of how were things handled, what was fixed, and just holds up the process.
And I feel like that's different too more recently. I feel like insurance and insurance underwriters did not used to act like mortgage underwriters. Mortgage underwriters are so in your business and they want every document for everything. And I feel like insurance used to be a lot easier. You just called, you got the policy, you paid them for it, you had the policy, and whatever. But now, we're even seeing where trying to close on a deal, and these insurance underwriters want inspection reports and they want proof and receipts that work has been done.
Yep.
And they're actually going out on site and inspecting homes. Is there
All
I
of it.
just take did I just take your whole thing there? Is there anything
No,
you have to add to that?
I could deep dive in any one of those, but the truth is they are being very calculated and conservative with the risks. These carriers don't want to take on something that is highly likely to be paid out. Um, it's unfortunate because I hear all the time, if I have insurance and I can't use it, what's the point? So I tell people, let's get it as affordable as possible and customize it so that it's covering you for like the things that are only really catastrophic. And I ask people to look at that threshold of like, how much are they willing to spend on their own before bringing insurance into it? Because it's kind of messy right now.
Well, and that's the kind of mindset that we had to switch to in medical insurance too, right? Like, because in the past, where kind of everybody had some employer plan and you just had a $20 copay or whatever.
Right.
But now there's so many of those high deductible plans, and you had to switch your mindset and go, okay, well, at what level could I go ahead and self-insure? Like, if I had medical bills up to $5,000 or $10,000, sure, that's not great, but I could make payments over time and it wouldn't bankrupt me. Um, so
Yeah.
you were really just insuring against catastrophic medical things like being in the hospital and now having $100,000 or $200,000 of medical bills that could throw you into bankruptcy.
Yes.
So I hear you saying that we really need to have that same mindset with homeowners insurance.
And how do we make that shift, right? It's just constant education. Every phone call comes with that level of like awareness that, if you have a 2% wind hail deductible, it's because that's what the carrier is requiring. If you want that at the carriers that don't require it, here's why you might want to consider that. So it also depends on the home value because this 2% is percent of what? It's the dwelling limit. So people don't know this stuff.
Yeah,
Like that's my job to tell people, right?
Because I was curious, was the 2% of the amount of repairs needed? Like you're kicking in 2% of what they have to pay out, or is it 2% of what your home is worth?
Yeah. The declarations page, like your policy jacket, there's a dwelling limit. So whatever that number is, and it inflates, every year it's going to inflate. So I really avoid the percentage deductibles when I can. I much prefer helping people with a fixed deductible. Yeah. It's just one of those little things that I kind of meet people where they're at. Some people, I spent 2.5 hours on the phone Friday night. That's how much I love insurance. It's bad. So this woman was like, had a lot of great questions. She had a lot of experience with past, claim stuff. And she asked all these questions. And by the end of it, she felt really comfortable knowing exactly what was covered and what wasn't. We customized it and made it more like what would work for her and her husband. And yeah, it was so much better than wishing people would ask the questions or jamming stuff down people's throats. So when people call and say, I just want the cheapest policy, I'm not always the best agent for that because I'm not going to leave you without water backup coverage. And I'll do the best I can, and it's usually a higher deductible, maybe not too many extra endorsements, but I read every policy like I would for my mom or dad. I'm not adding extras and I'm giving you what you need.
Yeah, that's actually one of the things I really appreciate about you is your ability to compare coverages, even with like other agents' policies, and kind of do an apples to apples comparison, and then trust you to say, hey, you've got a good deal over here. You should go with that, or you should stay with your existing insurance, or maybe I can find you something better, or I can find you something better. So I love that. We should talk a little bit about eligibility because, there are things that the insurance companies are looking for when they're insuring people that are affecting their premiums. And this is what we want to get down to, right? Like, how do I get the lowest premium?
And how do I find the right house, right? Like, what do I not want? So,
well, we want a new roof. I know that.
The roof is like number one. It's kind of like when someone says, I don't know the age of my roof, I stop right there and we have a conversation. Like, we're going to find out before you sign it, like before you have a policy with me or anyone else, you're going to know the age of the roof. And we do that through talking to the seller's realtor. Sometimes I can find like a permit. But it's important enough to the carrier, so it's got to be important to us. Over 10 years becomes ineligible with a few carriers. 15 years is considered old
Yeah,
for a roof.
you would not believe how excited I get about new roofs during showings now. So
Big difference.
and even a few years ago, it just that wasn't an issue, but it is now. What else? What about the people, the eligibility requirements, the roof age, the loss history, and it's not just the person. So if I'm going to buy a house and I'm shopping for homeowners insurance and you're looking at my loss history and that makes sense.
Yeah.
And what else are you looking at?
Like the risk of the property itself.
Yeah.
So whatever's happened at the home you're buying, even if it wasn't a loss that you made on a past property that you don't plan to own after this closing, the last 5 years, the last 60 months follow you around. And so even the $0 inquiries, the big
But the
losses.
property too, right? Like
Mhm.
if I'm shopping for a property and the previous owner or the seller
Yeah, we have questions
made
about.
claims on that property, like
Yeah.
that is even going into.
It's not going to be rated against you, but they want to know that the repairs have been made. They being the carriers, the underwriters at these carriers, ask all the questions, and if I don't have the answers, I have to go to the person I'm quoting just to get them, and that usually means a conversation with the realtor. Is that important right now to them feeling comfortable like offering a policy? I get all kinds of blocks and red tape, and then I have to submit files and call back and be on hold. And gone are the days of making claims for any old little thing. Gone are the days of a smooth quote process. But we're good at it. It just takes time. Gone are the days of a quick quote.
Yeah,
No,
I know you miss those
I do.
days.
I really do.
Um, so as we talk about the whole industry kind of becoming more conservative, um, that means that fewer people are actually eligible to get policies with what you would call standard carriers. Can you talk a little bit more about what that means? So, say we had loss history, or the roof is old, or you don't have any autos to bundle with your home, or whatever it is. There's some reason that the big standard carriers don't want to take you. So now what?
There is like a parallel universe. It's called E&S, excess and surplus lines. They are brokers like me, and I partner with them to request options for these non-standard properties. And it's becoming more and more standard, a daily practice that I'm interacting with these underwriters. So there's several different options I have: Big Sky of Hull and Co., Burns and Wilcox, RPS, Westpac. These are names of companies that have an assigned underwriter for my agency. And I reach out to them and I say, do you have a market for this? And they'll say yes or no. If they say yes, I can submit a request for a quote with about 12 pages of documents. I mean, we're talking like, when was the circuit breaker box or last replaced? It's very punitive to the point that I want to make sure that they're not eligible anywhere else before going that route, which is also one of the requirements to request a quote from them. They'd have to have been denied by at least 3 standard carriers.
Oh,
So before I can even go that direction, I'm vetting that process to make sure that they fit into that, because the price tag is high. I mean, these excess and surplus line companies will write just about anyone, but it comes with a price tag.
but the policy itself, I mean, there's no risk in terms of having insurance through, let's just say Burns and Wilcox, I've never heard of, but I've heard of State Farm. Because we got this question from a client recently, and they were kind of like, who's that? I've never heard of them.
Yeah.
Like, is this actually gonna be a
Yeah.
good insurance policy? Will they
It's a lot of
pay out?
trust to put into someone like me. I mean, yeah, it's scary. And all they can do is say, I really want to close on this house, and I've seen people walk deals because they just aren't willing to go through all the extra. But if you really love the house, what do you say? Date the house, marry the
Marry the house,
marry the
date
house,
the
date
rate.
the rate. So that conversation comes into this too. It's like, is it time? And Kiki always finds a way to make sure it is, because Where there's a will, there's a way. So these carriers have become very helpful in filling those gaps, at least temporarily, until a claim falls off or until maybe the industry gets its sanity back.
Hopefully,
Yeah.
fingers crossed. Well, I know you and I could talk about all of this stuff in depth for hours, but I feel
Yes.
like this has been a good kind of hopefully you guys at home got some good information about insurance that you didn't know before. So,
Thank you. It's
um
been a pleasure.
yeah, if you're looking for insurance, well, and how often do you recommend people shop for insurance?
Right now, with things changing as frequently as they are every year,
For you.
2 to 3 years. I would have said 2 to 3 years like last year, but it's things are just always changing right now. So just call a broker. Call me.
Yeah, so once your renewal comes out, that's the time to call Amanda Berry, Legacy Insurance Partners.
Thank you.
If you like this content and want to support the channel, don't forget to hit the like, subscribe, and alert bells before you go.